guys, Sam back with you here on Monday, August 20th. We're middle of the day. And what I'm going to try and do here is do another mystery chart here. Now you say, oh, man, why are we doing this? Well, the reason that I'm going to do this, and some of you may know if you track this, you'll recognize what it is right away. Others of you may not, but the reason we do this, as we sit here now in essentially the 8th month of a long bear market in crypto, you know, we're just trying to get you to open your mind and your trading horizons a bit, because the skill set that you're learning here, whether you're a member or you're following on YouTube, I understand that you come here, you're looking for insight into what's happening in the crypto sphere. But, well, we all know what's happening in the crypto sphere. We're either down or sideways. So, you know, if you're comfortable going short in crypto, well, there's a reasonable argument to be made that we're too far down to be looking for more shorts, and it's too early to be looking for buys. So, of course, one choice is just to be sitting on the sidelines, but there's certainly plenty of other assets to be trading. So we want you to understand that the skill set that we're trying to teach here is, as I've said many, many times, the underlying asset does not matter. They all move exactly the same way. So we periodically will do these mystery charts just to open your mind a little bit, to say, hey, you know, maybe I can look outside of crypto and look for some other opportunities. Again, they trade the same. One thing I promise you, if you don't know this already, they're infinitely easier to trade. Long, short, just as easy. You don't have to go through the gyrations that you have to do if you're trying to short crypto, or, you know, if you're in the States, you got to go get a VPN so you can get an account somewhere. It's just a giant pain in the ass. So if you're open-minded to trading some other assets, I think you'll like what you see here. So I'm going to try and keep this hidden here, and I'll reveal it at the end of it. So I've got a daily chart here on this asset. And we're going to work on it from the 2009 low. All right, so look, daily chart, that's 8 years ago. All right, that's a lot of history, but again, as I will often tell you, if you were approaching a new asset, something you hadn't traded before, would encourage you to start with the daily chart. Sorry, let's turn my fan on. All right, so if you're looking, so here's the financial crisis low here. Now, coming off of this low, well, we got to get a clear count on it. Now, if you were kind of working backwards here, if you just brought up this chart now and you didn't have any work on it yet, you hadn't tried to find a count. Well, the one thing that absolutely screams at you is what happens right here between this and this. All right, that's about as clear an impulsive Elliott structure as you're likely to see anywhere. Over here, not so clear, very complicated, some very difficult wave analysis here to try and get this right. Took a lot of measuring and double checking. Excuse me, guys. I'm almost over this cold, I promise. Last time. All right, but that is just unmistakable. And not only is it unmistakable to your eye in terms of what's there, but it's incredibly technical. All right, so if we look here for the wave 2 to the wave 3, get it right on there. That's to the tick, right? So here, for the length of the 3, where are we looking for the 4? Between the 23 and the 38 prime zone. Look, we go right into the lips of the Vegas wave, and we come down. We hit algo target to the tick. Now, I absolutely promise you that is not happening randomly. That is clear algo participation. They sold it here. They took profit here. Here's the reaction. And by the way, what have we done? We've gone right back up to the 50. Now, if you were measuring that, you'd be looking at all the way, right? So the highest high before we start that. So to really look at it clearly here, now we're through the 50. we have some targets here that may kick in here. Hang on a second. Damn it. One of these days, I'm going to get through a video without having to cough. Okay, so if we're working backwards here, now I'm labeling this as a WX, right? At WXY. All right, so it's to finish this. So this 5-wave structure is finishing something. So I've got it here as an A, B, and then we finish in this very clear 5-wave structure to give us the C of the Y. So coming off the low, we get a fairly complex, it's impulsive, but we had an extension here in the 5th of the 3rd, or pardon me, an ending diagonal in the 5th of the 3rd, a little tricky. But we came down here for the 4, and then we finish here with an impulse. The extension was in the 5th, but we don't overlap the 4 here, so it's very technical. Then A, B, C, down we come into a W. Now here's an absolutely textbook X wave here. So ideally you want to see them anywhere from the 786 to 90%. You can see here from the pivot. This is absolutely textbook, unlike what I was just showing you previously. On the last video when I showed you in Ripple where we had this shallow X wave, well here's right to the 887. It couldn't be any better. That's right where you want to see an X wave. So from that we go down here, we get our A wave, then we get the AB, we finish with the C of the B. All right, so just making that point here. And then we come down here having put in that B relative to this A wave here. So A, B, let's get it up here. A, B, C into the B wave, and we finish with this very clear impulsive structure to give us the low down here for the Y. All right, so W, X, Y. That's how I'm counting it anyway. Excuse me, I'm so sorry. So glad when that's over. All right, let's go from the daily. Let's go to a 3-hour. All right, so off of that low. All right, so here, pull this over here. All right, so here we have, oh my God, have I got the Y? Hang on a second. I have to do it on a 4-hour. Not an 8. Here's what I want. Okay. Here's the low I'm looking for. So let's go back here a second. So hang on a second. All right. So here's our Y wave. All right, sorry as I reorganize here. So, damn it. Okay, so sorry. All right, so coming off of this low here, we start with a leading diagonal. All right, it's a little tricky here. So coming into this, so we get the low here. So off of this Y low, all right, we go 1, 2, 3, 4, overlap the 1, so we have a diagonal structure to give us our 1 wave. We get a leading diagonal. We finish with the ABC. That's the 3-wave structure you're looking for in a diagonal. And I think, if I recall, this was technical as well. So if we go in a diagonal, you'll recall that we're looking for a fib relationship between the start of the 1 wave and the end of the 3rd wave. So here we come right to the 50, right? So classic algo. So that's, they front run the 50, take it up. Now they don't get target until over here. That's the difference between you, me, and an algo. The algo doesn't care that we came back down here. It's just going to stay long until it gets target. So they get it eventually. They do get it. So here, now we come down here. It looks like we go A, so we have this kind of awkward looking diagonal into an A wave. Here's the B, and then we finish with the C. So we get a 1, 2. Well, we want to check that. Is it technical? So from the proposed start of the wave 1 at our Y low here, we come up into a 1. Now we're a little shallow of where you'd be looking for that 2 for the relationship between the length of the 1. So we're a little shallow, but we know it happens. It's a lower percentage. But this in between the 50 and the 38, it doesn't disqualify us by any means. And we can certainly get a clean count out of this. This was a little certainly choppy coming down here. But this particular market, when I reveal it to you, that will make more sense. But it does look like we go 1, 2, 3, 4, 5 with a leading diagonal into the A wave. Here's my B. If I recall, that was technical. All right, so if we go down here. All right, so the B wave, anywhere from the 50 to 786, we're in between. We split this kind of spiky volatility. That doesn't surprise me. But the 786 holds it. We don't quite get target there. Don't quite make it. But I've got this as a 2, and it could just be that what happened is instead of getting that target, they ran in, they just for whatever reason decided to front run it here. Let's check one other thing here. If I recall, they might have used this. Yeah, that's a possibility. So look here. So this, I could have this wrong here. So we could have this as A. No, I think that is, from an Elliott perspective, that's more likely the A wave here. But remember, an algo does not care about the Elliott count. So they might take swing high to swing low. Despite all this, we come here's golden zone and we get second target to the tick. Hard to say. I can tell you I don't know what happened there. Why they pivot there. Could be just it's a double bottom. Oh, there we go. So sometimes just looking left will give you some clues. So to note what happens here. So sorry. Sorry. So here's our pivot low here. Potentially now what we have is prior support kicking in for support here. It was resistance here. So note here. So here's support. Up we go down. Resistance here. Now they get through it. Comes back down. It's support here for the proposed B wave. Up we go. Now it looks like it's support again. Hard to say, right? So did they pull here? Well, that could be it, right? So they come right to the golden zone here. So the wave one, that's interesting. So the wave one pivot holds here. So you get this structural prior resistance now kicking in for the support here. So you have this alternating support, resistance, support, right? Then now the resistance becomes the support yet again. So it's tested twice. So this pivot here was significant, which is why I have it labeled as our one wave here. So I know this is significant to the market. So that could very well be what's causing that here. So from the too low to our swing here, they come golden zone and then they go up and ultimately they get second. Looks like do they get almost? Yeah, they get, oh my God, look at that. So they get third target, a damn near to the tick. Looks like they go through it by a tick. So algo's happy and doing just fine. So from our perspective here, we go 1, 2. Now this gets a little tricky. So I'm going to go, let's go to the 3 hour. See if we can get through this. Without me annoying the shit out of you with all that coughing. I'm so sorry. Okay, so here we go. So it looks like A, B, 1 for the 2. Now working our way up. Now this gets a little difficult in here. So here what I'm labeling as the one wave here. So it looks like we get an expanded B wave. So let's dig in here and you'll see why I've got this. It looks to me, so if this is my one wave, let's wick it off, just force a habit. I will always wick off the one wave. Get that right on there. Okay, so it looks to me like we go 1, I can get this over here. 1 A, B, C into what I propose looks to me like an A wave because I don't have a good count here that works otherwise. So if we go 1 A here, now we get an expanded flat, right? I understand. I know that's very, very, very far for a B wave here, but note what happens here. So we get through the 65 here, but we end up right to second target. They get it over here. So hard to say what happened there. Let's look again. So let's think about it. So if an algo gets stopped out here, which is likely, they would reverse here. So pardon me, it's not a stop and reverse. What I mean by that is they're going to take the next 50. So let me show you what would have happened there to the algo. So they'll work from that. So now with the break here, let's see. So with the break here, so if I go here to here. All right, here's the break. So that implies the market is going down, right, with the break of the 65. So they're going to take the next 50, and it looks like they get stopped again. So here that you can see the reaction. So we come here, they reverse again. So they've taken 2 losers in a row. Now they're going to just draw the next 50. Right there, and so they get it there. So do you see what they do? They just keep reversing until ultimately they get on the right side of it. And we're just trying to figure out what they did last. All we're trying to do is use the Elliott wave to kind of, as I will often say, kind of tuck in behind them and try and figure out, can we get our wave count in alignment with what they did last? So for this looks to me like this is an A, B into a big B wave here. So algos they took two small losers, but then they get full target here and a little bit beyond that. But it looks to me like given this 1, 2, 3, 4, 5, because this is very choppy coming down here, but this looks to me like we get an ending diagonal to give me my C wave. So as it relates to the start of it here, so we go 1. A wave, A, B, C into the B wave, and then we come down A, B, and then we finish with 5 into the C. So that sets us up looking for a relationship between this pivot here and this pivot. Right now, what do we see here? So it sets it up perfectly. So we get a slight front. Well, so they start at the 50. They'll defend to the 6-1 or to the 6-5. So from this low here, from whether it's wherever they started buying here, they get right to target. You see it? So eventually Yeah, eventually they're going to get it. I think they got one. There was another one in here. Remember, it's not the same people, same algo. All right, so there was a second one. God damn it! Sorry, guys. So we also had this one here, right? So they sold this right to the tick. You see that? So we get this in the swing here through the 3 to the 4, the 618 holds it. We come down, we get algo target to the tick, which would explain why we pivot there, right? And then we go. So it's unbelievable, really. And then we go. Then we go from here, we go from this, so they get target here. Look what they do. They get it twice in a row. So they get to the tick target here, and then they get to the tick target here. So they took two small little losers. They're doing just fine, right? So they get full target there. All right, so for us, this looks like we've got in white here 1, 2, right? It plays. It actually plays. It's technical, despite the expanded B wave, which I don't like to lean into, but when it's just a process of working through the count. Where can I get this to fit that would make sense with what happens next? So I do think that's 1 A, B, C, right? So the C, we don't get a new low. We're not below the A wave, right? So that this ABC looks like this, A, B, C, and then we go 1, 2, right? You follow that? Okay, so A, B, C into my 2 wave. Well, from there, now let's back out. All right, so from that low, then I get a very clear 5-wave structure. So if that's right, if I have it right, if this is 1, 2, 1, 2, then I go 3. Looks like I come down A, B, C into my 4. So let's check that, see if it's technical. If this is right, if that's my 2, there should be something here I can look for. So where do we look for the 4, right to the 38, just absolutely perfect. Also, very common that you'll see it retraced to the prior 3, 4. That's right where we come. What happens next? Algo target. All right, so this has been a very lucrative market for algos. They're just getting paid on coming and going, up and down. They're getting it on both sides. So I would be willing to bet you here we've got another one right here. All right, so here on that, they buy the 50, they end up with, ultimately they get third target. So they get all their targets. Do you see what happens here? So they get the first target, they get second target right here, and they get third target right here. Right? 1, 2, 3. All 3 tagged reaction, tagged reaction, tagged reaction. Right? That's how you know that it's an algo. It's the reaction at the target, not what happens at the buy. All right, so let's pull this apart. Okay, so this has worked out quite well for them. So we've got 1, 2, 3, 4. Then yet again, I go 1, 2. Now that looks to me like we go into a diagonal because look at the 4 just bare. So here's the wave 1. All right, so we come down. Here's wave 4 overlapping. So now we're in a diagonal. So I go 1, 2, 3, 4, 5. You say, wait a minute, that's a third wave. How can I have a diagonal? Because that's the 5th wave of the third wave. We can allow for a diagonal, an ending diagonal in this case, to finish the third wave. So in white, we go 1, 2, big 3, that's the impulse, clean, clear subdivision down for the 4, and I finish it with a diagonal. Right? Ending diagonal gives me in my 5th gives me my third wave. Now coming down. Let's look coming down, right? Is it technical? So coming down, it looks like we go 1, 2, 3. We don't overlap, so just force of habit here. I'll always do this. So we don't overlap here. So we get 1, 2, 3. Right? Yes, I checked it. 3 is longer than 1. So we get 1, 2, 3, 4. Looks like we double bottom into a 5 for an A wave. Now up we go, A, B, C into a B, and then it looks like we finish with an A, B, and then we're going into, it looks like the 5th wave is starting again. So it's hard to say. So this is one possibility here that we've got. Oof, this could be an ugly diagonal. So we could have 1, 2, 3, 4, 5 into the 1 wave. Potentially a 2. Now this would be problematic here because that's going to be too short. So let's measure it. Let's check it. So if we've got the 1 wave right, and that's the 2, well here we need to at least get to 100%. Right? So this is going to all play over here. So if that's right, if that's A. Now the other possibility is we have a truncated C wave here, so we get a B wave over here. So we get A, B, C. Actually, I think that may be a better fit. So then we get 1. Let's just look here. Let's just double check it on the fly. So I think that is actually a better fit. So that gives us our ABC into our 3, setting up the diagonal. Okay, so this is what will be important here, because in a diagonal, the 4 must, not optional, it must overlap the 1. So if this is going to play, we'd be looking for the 4, just like every diagonal I've shown you before. We're looking for a relationship between the start of it, the start of the 1 wave, and the pivot for the 4. So that's the algo pole, or the fib pole, I should say, that we're looking for. So if I take it through that, so commonly found, it would be the 50. Right, that would give us the overlap here. The 38's not going to give it to us, right? So the count is wrong if we don't overlap here, or at least this portion of it. But it certainly looks like I've got a good ABC coming in here. A, B, C, to give me that 3-wave structure that I'm looking for in a diagonal. Let's change that color and we'll go up a degree so we can follow it. Okay, so A, B, 1, 2, A, B, C into my 3. Looks like 4 yet to come, but that sure sets up for a nice pivot here if we're going to get there for this. Right, that would be a common target. All right, we'd have our algo target off the 50. That would give us our ABC. So what is that? So we're looking for the 4. Now let's put the whole thing together. All right, so if I've got it right, it's the first question you have to ask, and it certainly could be wrong. But if I've got it right, and this is the 4, 5, and we've come down, now we've just done an A, B, and we're in the process of trying to complete. So let's pull back out to the larger degree. Okay, so we've got our wave 2. We've got a candidate here for our wave 2 here. So we'd be looking for some sort of relationship here. We know we're looking for the 4. Prime zone is 23 to 38. So let's pull this apart now and see what we would line up with. So here's my 2 low down here at this prior pivot. Here's my wave 3, if I can get right on it. All right, so look what we get here, lining up right where we'd want to look for it. And note this, we get a little low volume node right here, right at the 38. So that looks like that's setting up rather nicely as a candidate for a buy to get the 3, 4, 5. So you'd be looking to be entering here looking for this move. All right, what's the risk reward? Let's take a look at it. So if you're a buyer, slight front run on the 38, assuming we get a technical reaction down there, we come up here. So, in this particular market, I wouldn't give a whole lot of room because it's not inexpensive to trade here. So I would either be using an option to hedge, or I would be, in this particular market, I might be looking for some protection here, or I'd be very conscious about where I was trading it and in this particular market, you wouldn't have to worry about a stop not getting hit. But if we come down here, so that risk reward there is 10.47 to 1. Now you'd be risking, and this would be, that may be too much to risk here because we're on a 3-hour chart. Let's tighten that up. I would want to get on the other side of this high volume node here. Well, there's 9.8 to 1. The risk tolerance is going to have to be subject to your individual risk tolerance and your account size and what you're trading here. So this is the ideal way to trade it. If that was too much risk for your account size, in this particular market, you could hedge it with an option. So we'll that's the kind of thing we're going to get into down the road here as we start to introduce option trading as well. So so the alternate, right, would be, because you didn't like that risk. So let's go down to an hourly, because maybe that's just too much for your account size. Once I reveal what this is, you might say, hey, that's more risk than I'm comfortable taking. That could be more risk than I'd be comfortable taking. Let's just look at it. So the alternate here would be to do this. Let this come down, assuming we're going to finish, right? We don't know if we get a diagonal or what we get, but we're going to get 5. So if we're going to finish down here around this zone, right? Wait for the pivot. Now we're on the 1 hour, so and I've shown you this many times. Wait for the first little small 5-wave motive wave, and then catch the 2, trying to get the 3. Right? So this would be a much lower risk trade, assuming. Right? So you have to make a few assumptions here. So first assumption is that we get a pivot right here approaching the 38. Now remember why we're looking for that. Not only are we looking at the 38 relative to the length of the wave 3 as to where we'd be looking for it, but we're also looking for the algo target here. All right, so see how we get a little box down here. So we've got, assuming, now we don't know yet that they get to the 50, but if they do, then I get a little hot box down here. So that's where we're looking for the reaction. right? You can't go, oh, if 4 low is in, because you just don't know. But you can say potentially here, I have a technical zone that would be consistent with many, many other wave 4s that we would come down to the 38. Now, I also have an algo target there. Now, that algo target is less relevant if we don't get this 50. Now, if we do come up here and get that 50, then that does a couple of things for it. It validates the count because we get the overlap of the 1 that we have to have. It can be 1 tick, but it has to overlap if this is going to play as a diagonal. So if we get this on the 4, and it doesn't have to go to the 50 to the tick, but we just have to overlap this 1. If we come down and we finish in 5, right, and it certainly could finish with a diagonal, right? It doesn't have to be an impulse. So it could finish with a diagonal, but we need a motive wave. We need 5 coming down here. So it sets up this as a place to maybe take a little bite size here. In this particular asset, even a bite size here is not insignificant. So you might wait for it to react and show you if you're going to get 5 off of that, because that would set up as a candidate for a 1 wave. So you could have a 1, 2, 3, 4, and 5 going in. So the play would be, the more conservative play would be to trade for the 2 into the 3, with the distance to the stop being, well, let's look at it. So if you were playing the 2 and you were going to be out under the 38, right, now we have much lower risk. We still have the upside target on the assumption that you stayed with it, right, which is may or may not be the case. But if you were to stay with it, that's potentially, now, if I scrunch this and put it in context, can I do that? No, I guess I can't. So let's go back to a 2-hour. If I put that in context, that likely just the 1 wave of the 5th wave, which would be taking us up towards these levels up here. Right, so that would be the more conservative play, by the 2 into the 3. All right, and then quickly you can move. If you got a reaction there, you'd be looking for it between the 50 and the 618. If you got the reaction, then you move the stop up to break even. Now you're more comfortable. If you're going to carry this overnight, you've got your stop in. You've got a risk-free trade. That's the idea particularly in this kind of market. See if you can reduce the risk as soon as possible, because it's an expensive market to trade. So what is it? Well, let's reveal it here. I will take my little blur off. So this is crude. All right, so this is, perhaps this was the giveaway that I've got a delayed chart here. So that's a full count of going all the way back to the daily of crude oil. All right, working off of this low. So you can see it's incredibly technical. Should certainly be no surprise that it's very algo driven. So we can certainly spot what the algorithms are doing here, and then again try and tuck in behind them. Here's the target that we're after here, and all we're trying to do here is get this completed 5-wave structure. Right, we've got good candidates here for the 1, 2, 3, and the 4. Now we're just trying to get into the 4 to ride up for the 5. And if we get that, right, big if, but if we were to get that, then all we've done is put in a 1 wave. We've got a completed 5-wave structure. So the next thing we're going to do is just pull from low to high. Let's go all the way back here. So if we get this push to give us the completed 5-wave structure, then we just do exactly like we would with any 5-wave. We wait for it to complete, and then we look for the buy opportunity between the 50 and the 618. All right, and then that's looking for the larger degree, big 3. All right, guys, don't shy away from crude. It's not inexpensive, and you've got to have some margin to if you're going to carry something overnight. It can be day traded. I prefer to swing trade it myself, but that means you're carrying it overnight, which is often why I'll use an option just to provide some extra hedge because of the geopolitical risk. So it's a market to consider. You can trade it in smaller volume if you could use a CFD if you've got a Forex account. So it's something you can trade. You don't have to take a full-size futures contract. You could trade it in smaller size with an FX broker on the CFD. So you've got options there, and then literally the other choice is to use an option to give yourself a hedge. So if you were buying the futures, you could create a partial hedge by buying a put to offset that. Now that's right, and we're getting ahead of myself, right? So that's a whole nother category of training that we'll be doing as we get into the option markets. But right now, I just technically, so if nothing else, so if you're a crypto purist, I'd like to think that you're starting to recognize that this methodology can be applied to any market. The underlying asset, as I've told you many, 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 many times, does not matter. So I just want to open your thinking, right? Don't be a crypto only kind of guy. There's just no reason for it. What do you care? You're in the business of trading to make money. Right? So you can say, well, here's often a comment I get. Yeah, but it happens so much faster in crypto. Yeah, when it's going up. How's it going for you now on the buy side? Not so well. So I've got a whole lot of clients now that were traders, now they're holders. So just something to keep in mind, right? So open up the horizons. You're trading to make money. You're looking for opportunity. You're looking for technical trading. You're looking for volatility. You can get out of crypto and apply these skills in any other market that you choose. Well, it doesn't have to be futures. Could be equities. Could be Forex. Right? Okay. You got lots of choices. All right, guys, with that, I'll wrap it. I went kind of long there, but wanted to kind of open up the possibilities there and take you through a detailed count. All right, guys, that'll be it for now.